Tsly and SCHD are two of the most popular ETFs in the finance space right now. And with YieldMax investors living on Reddit and my comments section, I think it's only fair to make this video. So today, I'll be sharing why I actually prefer real man's investments like VU, SCHD, or an actual business, sharing my plans for 2024 when it comes to my personal portfolio, and so much more. But before you YieldMax investors from Reddit flood my comment section, make sure to check out the Do Dividend Stocks Not Drugs merchandise if you're a real man and you like real man's investing. And for all the YieldMax investors who have lost money this year on total return and who are underperforming the stock market, I even have a 15% off discount code through Christmas for you guys. Thank you all, and of course, roll the Christmas intro.
Here comes Santa Claus, here comes Santa Claus, right down Santa Claus.
Please, it's too much winning.
Reindeers pulling on.
Hello, I like money.
I've said it here and I've said it before, there are actually a few people who own Tsly and these other YieldMax ETFs that kind of know what they're doing. They understand the risk that's associated with it, and those are actually the more respectful people in the community. But it's the people in my comment section who have the brains of a squirrel who think this is actual real investment and a long-term investment. Tsly has consistently underperformed the S&P 500, which is what most Americans actually invest in. So people who don't even know anything about investing are actually outperforming the Tsly investors. So to kind of reiterate and build off of the other two videos that I made on Tsly and the other YieldMax funds, which I highly recommend you go check out, and read the comments if you're bored as well. But to start off, it's not an investment, it's gambling. You're not investing anything into an actual business that will be producing any free cash flows. Now I understand the point of these YieldMax funds, and that's not the point when you invest into it, but that's the reason I don't personally own it, and I think it's not investing, it's gambling. But in this context, we're in a community that is talking about using your money and buying different businesses that will grow your free cash flows and grow your investment over the long term. You are quite literally gambling on the volatility of the certain stock, the YieldMax fund that you do buy. As I mentioned, nothing is guaranteed. If you buy a really quality business and you know what you're doing, or if you even buy the S&P 500, it's pretty much guaranteed over the long term to at least produce some return. But as I mentioned, nothing is guaranteed here. Your little 50% dividend yield that you get every month is not guaranteed. Some months it'll be 50%, some months it will be 10%. I don't like that, and that's not investing. I do want to mention here, I think it is appropriate if you really understand how these YieldMax ETFs work. I think as a short-term parking spot for your money, it's alright, but at the same time, I don't understand, especially in this interest rate environment, why you just wouldn't put it into a high-yield savings account where you can get a 4 or even 5% return these days, or put in some government bonds. Those returns are guaranteed, and they're not based off of the volatility of a stock's price. Now, I understand that these YieldMax stocks that they do pick are typically very volatile stocks, Nvidia, Tesla, Apple, etc. But over time, as those companies mature, they're going to be less volatile and investors are not going to be as frenzied with them as they have been over the last 3, 4, 5 years. And once again, I love to bring it out, the U word, underperformance. Tsly, Nvidia are all short-term investments, and they're even underperforming the S&P 500 in the short term. So even if you are using your Tsly quote-unquote dividend payment for, paying off your bills, using it to pay the mortgage, it's generating large amounts of income, well, surprise, surprise, dummy, you could actually sell out that same amount of the percentage of the yield you get. You could sell that same percentage out of your S&P 500 if you were to invest the same amount of money and get even a bigger return. Now, I want to talk about what real man's investing is. Real man's investing is the investing strategy that I've been following for the last 3 or 4 years and is nothing of what YieldMax is about. Real man's investing is buying actual profitable companies, unlike some companies like Tattooed Chef, that are actual businesses, unlike YieldMax funds, with real growing free cash flows. These are businesses and companies that are actually making money, actually offer a really good product, have good management, and all of the great characteristics that I look for in the businesses that I buy here on the channel. Now, if that intrigues you as much as it does for me, make sure to hit that subscribe button and turn on post notifications. But the reason that real man's investing is so gangster is really just taking part in the ownership of businesses, which, if you're picking stocks, is what you're doing essentially. But we look for owning businesses because there's so many perks to them over the long term. Let's start off with compound interest and dividend growth in the first place. The reason that I love a dividend growth strategy, and everybody likes to crap on dividends these days, the main perk of dividend growth investing, in my opinion, is finding just really high quality businesses that are going to continue to grow their free cash flows and don't put all their eggs in one basket when it comes to dividend and their dividend yield. You have a lot of companies these days that are not doing great financially but pay a huge amount in dividends, And overall, I have found that it's the companies that don't have the dividend be the main priority of their balance sheet or business. Those are the ones that end up having the best dividend payments and the best performance overall. The reason I also love dividend growth investing is because, one, my age, I have a lot of time for my dividends and the dividend snowball effect to take into place. Now, that's basically compound interest for all you math wizards. Dividend growth investing allows me to add stakes to my favorite and core positions and stocks and businesses in my portfolio without having to add any more money into my portfolio than I had when I originally invested in that stock in the first place. It's the reason I love it so much. I've covered this in the past on the channel, but eventually the goal for me with dividends, ideally and optimally, I want to just reinvest my dividends and a large amount of my dividends back into the portfolio annually. The fact that I can be reinvesting a complete salary back into my portfolio every year just gets me really excited on the inside, and the fact that I can also possibly take out some of that money and use it towards just buying cool shit in general. Vacations, experiences, intimate experiences, and so much more. And eventually at the end of the day, of course, I would love to use my dividends to pay for my living expenses in general. But in my stocks and in my businesses, I like to look for companies that have share buybacks, and over time do that so I can have more ownership in the company. Because of course, when you're buying stocks, you're an owner of the business, and over time, you want to be owning more of a stake in the business than when you originally bought. I think that's another amazing thing that I've started to realize recently in my investing journey too. The reason that Warren Buffett was such an amazing investor was because he acted as his stocks were businesses, and he liked to look from a different perspective than just somebody who likes to look at the financials of a company. Now, those are obviously important, but you want to look at some of the quantitative factors of companies too, which I have covered dozens of times on the channel. Brands, moats, pricing power, so much more. And for my portfolio in 2024, I think the big thing for me is just making my portfolio more lean, having every position in my portfolio really be a core holding, and a holding that I can foresee myself buying and adding to for a very, very long time, ideally 40, 50, 60 years. I think any other company that I don't really foresee myself adding to is most likely going to be sold out of, as you'll be seeing in my portfolio updates. And just overall simplifying things for myself at the end of the day. There's no need to overcomplicate things. If you're wondering how to find these amazing businesses that I talk about in today's video, the research tool that I use is DividendData.com. The reason I love DividendData.com is because of its easy, all-in-one place where you can research, find new stocks, look at companies' financials, have a watch list, track your own portfolio, and so much more. It's the best investing tracking software on the market today. If it helps you find a few good investments, it will easily pay for itself. So make sure to use the link in the top right corner or in the description when signing up. It not only greatly helps the channel, but you also get an amazing investing software in return. I want to thank you for making it to this part of the video. Let me know in the comments section, what are your thoughts on YieldMax funds? I would love to hear. Trust me, I really do. Make sure to check out the Do Dividend Stocks Not Drugs merchandise if you haven't already, 15% off through Christmas. Thank you everybody, and of course, Do Dividend Stocks Not Drugs. Have a good one.